Hello, friends. Hello, everyone, and welcome to this live session with me, Simply Stocks. And today I'm going to talk about the markets, which has gone up appreciably over the last 6 hours, and we've seen the move. I'll talk about different stocks, and I'll talk about your queries, whichever queries that you'll be having. So, how did you like the market today? And I would like everyone to pinch in here and come in, and then we'll discuss about the market. Walaikum salam, Khalid, being here. Hi there. Hi, Harun. Uh, Vinu, a very good afternoon. So, I hope people join in and let a number of people join in, and then we'll start the discussion about the markets. The markets are doing well, or are they? We'll discuss about that, and we'll discuss about whether we have missed the bus at 8,000 levels and we should have got in totally, or what lies ahead for India and what lies ahead with respect to the markets globally. So we'll discuss everything. Apart from that, I'll also discuss about uh, some stocks specifically. I'll discuss Nestle has moved up appreciably today, and there have been a strong buying in other stocks as well. We'll discuss about the fact that where is the current situation, external situations apart from the market is headed, the situation with respect to lockdown, the situation with respect to the testing that is going on, and so on and so forth. I'll also discuss a little bit about Kilpest India, and people are not getting chance to get into it. Also, I'll discuss about Bajaj Finance. There's a lot of queries about Bajaj Finance and what needs to be done. And at around 4,000 levels, I told you that the stock is going to fall further. It had fallen more. Around 3,000, I said don't buy it. Now at 2,200. So we'll think about whether to buy right now at 2,100, 2,200 or not, or we should wait even longer. There have been comments coming in from viewers with respect to Bajaj Finance. The fact that I have been telling them not to get into the stock. So I'll just clear that confusion in it. So we'll discuss about the stock market, about the current situation with respect to testing and whether the lockdown will continue. Also, we'll discuss about some of the stocks like as I said, Nestle and Bajaj Finance as to what needs to be done in those two companies, and Kilpest India as to what lies ahead for the company. So there are three companies I'll discuss in this live feed, apart from answering all your queries. Um Another thing I want to say that kindly support me through the website, through my Patreon website, and become a member there. I have shared the link many times and will share further. So kindly be on Patreon, and that would help me a great deal in continuing with this channel further and bringing you more live feeds and better stocks to analyze and to invest into, as well as you can use the feature of super chat on my this live feed, that from where you're putting in your queries, and use super chat to ask me questions, and I'll answer in major details about all the stocks, and whichever queries that you'll be having, it will help me grow the channel as well. So let's start with the markets first, because you might be having queries about whether the market is going up or down, and I had started a poll some probably 3 4 days or a week back with respect to the markets, where it is headed, what needs to be done, and so on and so forth. So my assessment with that, quickly I want to say, that is, this is just a bear market rally. That is my assessment. And what do you consider? Kindly type in your messages here. But I feel these are all bear market rallies trapping investors. We have moved from levels of 8,000 all the way to 8,800. We may go to again 9,000, 9,100, and come down again. I have a firm belief that we are headed lower than 7,500 over the next few months. And this market always rewards those who can see the future, who can understand as to what lies ahead, rather than buying on some impulse and buying on something that has already taken place. So people are saying that the market is oversold. People are saying that the market is uh, ripe for buying for long term and all this is correct, but when will this fall arrest? Has it got arrested today with this move? I don't think so. The move came in because of what has happened in US, and I'm surprised that such kind of a move came in, because I thought that the market would fall from 8400, 8500 levels and go lower. I don't think this is over. Uh, I have looked at the bear markets of 2001 to 2003, the 2008 to 2009 bear market, the 2013, and even 2016 when the market fell sharply. In all those conditions, we saw that the markets fell between 6 months to 14, 13, 14 months roughly for the market to bottom out. So in 2008 January, the market made a peak, and by 2009 March, we made a bottom, and we ended up having that bottom or round about that bottom in October of 2008. It took around 9 months to reach there, and then we went up three times. So we went up something like 20-30%, about two or three times, and then it fell again in that 6 months period between October and March of 2009. So October 2008 to March of 2009. And this is the phase that we are in currently. That's what I feel, that we'll have this sharp moves of 20-30%, and then later on we may see the market falling even 40-50% from these levels. Thanks a lot for your contribution, Jayashree, Shedge, and the super chat contribution. Just to take your query first, so your view, sir, your view on investment in Nifty Bs 4-5 years. Suggest good Nifty Bs. Uh, uh, First thing is, to invest into Nifty Bs, first of all, you need to go ahead and buy into uh, the Nifty every month. So you buy into an SIP all the way. That's the first thing. Second is, you buy the Nifty ETF rather than buying Nifty Bs. That's what I like. So the Nifty ETF works best, and you can buy it from any broker. The clear Nifty, you can say, the 50 stocks combined in that Nifty ETF, and keep on buying at these levels would be best. And probably in 5 years time, I'm pretty confident that the market would be double of 10,000. So easily it would be 20,000 in 5 years time, easily. And it could go even higher. Things will come out, and things will be much better, say 6 months down the line. I'm pretty sure that it would be much higher than that, but currently we could see some trouble. So you buy Nifty ETFs and keep on buying it. Other thing you can do is buy into large cap stocks rather than looking at say the Nifty ETF. So you buy into a Maruti, an HDFC Bank, a Reliance, as well as say an Asian Paints and a Pidilite. So you buy these five stocks, keep on buying it over the next 5 years. You'll gain even better leverage rather than buying into Nifty B. So these are my suggestions to you, and kindly be a member at Patreon as well. Uh, if you want to ask me further questions in that regard. I hope I have answered your question. If you have more query on it, you can post here the question. Thanks a lot, Karthik, for your contribution through Super Chat. And your question is your view on HDFC Limited. Best, you can say, company in lending for real estate. So if I would have to buy something in the real estate financing terms, I would go for HDFC Limited. But buy currently, and so buy in 6 or 7 tranches. So buy 12-13% each time. So suppose you have 1 lakh rupees to buy into HDFC Limited, you buy at a tranches of 12,000 rupees each. You buy for 12,000, say when the stock market is at 8,400, 8,300, and keep on buying on every 300-400 points decline, and you'll have a very good buy price. So that's my point for HDFC Limited. And thanks a lot for your contribution. So I was talking about the markets itself. So we have seen in 2008-9 that the market recovered in about 14 months. Let's go to 2013. Uh, The market made a peak of say 6300 again, 6250 or so in 2010 November, and by 2011 we hit 4200 or 4300. From there on in, the market started to go up, although the underlying stock started to fall even further. And in 2014, from 2011 till 2013 August, so that is a period of around 2 years, we kept on falling on on the broader market, on the small cap and the mid cap indexes. Although we kept on going up sharply in the large cap, purely because we had pharma and IT stocks embedded, and those pharma IT stocks really did well from 2011 onwards. So the Indian stock market went up to 56, 5700 from those 4400 levels in that 1.5 year period. Although the benchmark and the broader market indices fell. So in 2013, we were in a situation where the real index fell from 5800 to 5100, so 700 point fall. But the larger indices, the mid cap and small cap, fell around 40, 50, 60%. Some of the marquee stocks fell 70, 80%. And that whole bear market, which I feel is, which started in 2010, ended in 2013, or if you take 2012 July August as the benchmark, when the market hit that 57, 5800, we ended up in August of 2013. So we had that 12, 13 months of really bad time, and I still remember those were early days in my investment career. And I never liked shorting the market, or I never liked putting in shorts in the market or selling. But even then, in the last stages of that 2013 in August, I started shorting some of the metal stocks and made some money but lost much. So then I left it. But those were the last time, or those were the times when the market was about to bottom. And on 28th or 30th of August, around about that time, the market bottomed in 2013 August at around 5115. That is what I remember. Kindly check whether I'm correct or not, but it was around 5100, 5115, and the market bottomed. So you cannot have a bottom made within a month. So we started to go down in early part of February. It has been just about 2 months uh, when the market has fallen, or maybe even 1 month. I don't know. I think the high we made was in March. So in that 1 month, or just 1.5 month, we have not fallen that much. So February 2022 we started to fall big time from those 12,000 levels, and we are at April 8th, 7th. So we have in 1.5 months fallen a lot, but the time frame has been just 1.5 months. I believe that we could easily go the next 6 months without touching 10,000. And people are talking of 10,000, the 10,000 Virginia, we could hit 10,000. We may very well touch that level, but we may not close above it. And so in the next 6 months, markets will give you opportunity. I'm a firm believer that you buy below 8,000, closer to 7,000. And I have no doubt that over the next 3, 4 months, 7,000 will come. And why is that? What could be the reasons? Can anybody type here about the reasons for the market to go to 7,000? And I give you something like 30 seconds to type the points. Okay, so the comments that are coming in and coming in very fast. Well, Hitesh said Q1 results. I agree completely. Sid says recessions. Yes, of course. Hitesh again, financials would be bad. Absolutely. Dr. Praveen says financials will be bad. Some people are saying that he doesn't think that the market would fall more. GDP numbers will be bad, Hitesh. Uh, yes, I think GDP IIP market is trying to factor that in already. But the other factor or major factor would be the problem that is existing in the whole of the world currently, and whether we'll be able to find a vaccine or not. Unless we are able to find one, this market is not going up. and we are seeing how much of an escalation it is abroad. So when I was talking about the market, and I believe firmly that 7,000 would come, the first reason, the major reason is the scare that we are having, the health hazard that we are having. That is one thing. But what are the other reasons? First of all, the GDP numbers, which would be extremely bad, and we might see a degrowth for this quarter, and we might see less than 2% growth as it was envisaged by UN. So FY21, we might be staring at a growth rate of 1% or less than 1%. That's one thing. So we had an EPS of 400 and 50 rupees or something, 420 rupees. We might as well close out FY21 with 420 rupees. And at 420 rupees, if you look at 9,000, we are trading at 22, 23 times, which is expensive considering what kind of an environment we are in. That's one thing. Second thing is about the sentiments of the people and how quickly the markets would rebound, how quickly people will go out and buy bikes, buy cars, how quickly people will go out on vacations or go to a movie theater, and so on and so forth. Even if it opens, how quickly people will start traveling by train and plane and engaging the same way as before. I don't think it will happen very quickly. I think it will going to take at least 6 months to a year, and I think that part of an industry will suffer. Hospitality industry will suffer. That is another reason. And the third and the biggest reason, which I'm now coming to, that thing, that whether we are testing enough. So if we do not test enough, then we could be in deep trouble with regard to the infection. And if we are able to test enough, then it's going to take time. So I believe then the lockdown may have to continue. So in that regard, if the lockdown continues and if there are enough tests that goes on, there will be some more cases that would come out. I'm pretty sure. So in that sense, we should be staring at 7,000 levels, because if the lockdown continues, every day lost is a huge loss for the stock market and for the companies that are listed. And hence, I believe that in 3 months' time, or between today and probably June, we could be staring at a level of 7,000 in that period. And we could have a longer period or gestation period of the market falling more, of the market going to levels closer to 6,500, 7,000 and staying there rather than seeing a V shaped recovery. So, all these 10% moves in the market are not, I mean, these are not V-shaped recovery. These are only bear market rallies, and they are always fast. They are always furious, and they are very detrimental for long-term investors, because what happens is your price would be higher by around 15-20% for a week, and after then the capitulation begins, and then you start to lose, and you don't have money to invest. So be very careful in putting in money. Cash is king at the moment. If you don't if you have not bought into it and you have a number of you can say shares with you, then buying. I mean, start buying at lower levels, at 8,000, 7,500, 7,000 levels. So don't put in the cash very quickly. That is my opinion, and I think this is going to continue linger on for at least 2.5 months. Thanks a lot, Bloodbathi, for your contribution. Thanks million, and any questions you have, you can put it here. Thank you for your super sticker contribution. So that is my opinion. I feel that don't get trapped into this feeling that okay, everything is fine, and now we are headed to 10,000, 11,000, and new highs. Uh, Wait for major declines to get into the market, buy the best in the business, and then just sit on it for the next 3 years. Now, the next question would be, when will all this then clear up if you think that this is not going anywhere too soon? This will all clear up when we have tested enough, when we have quarantined enough people, and when we in India think, just like in China, that we are set to move on with our lives with a little bit of you can say cases here and there, we can start to be working in the same manner as we were working, say, about a month back. So we have to have individuals here in India would need to have the same sort of security and freedom as they were having before the this spread came about. So and this will take at least 3 6 months, and that's why I'm saying that minimum 6 months from March you can take for this market to bottom out. So that is end of August. Normally August is extremely bad for the markets continuously every year. I think August will be bad this year, and probably around in 6 8 months time we'll see this happening. So next 6 months we'll see these rallies happening. Ignore these rallies and keep buying on large fall, and do not worry about noise, do not worry about what experts and people are saying. Keep buying on mega falls, and probably 1 year down the line you'll be much better off. So that is my thought about the markets. Now, before I begin with my analysis of the three stocks that I was talking about, and I'll take up all your questions as well after this. So, I want to just remind you that the super chat feature is on. So, kindly ask me questions from super chat, and it will be prioritized that I answer that question immediately. I'll take other questions as well as and when I complete my analysis of these three stocks, because there has been a lot of demand for these three stocks coming in on many forums for me. And I would like to say about these, because once and for all I want to clear doubts, because a lot of queries came in for Bajaj Finance, and a lot of queries on my Patreon website also came in. And this is the link of my Patreon website. You can visit here, and also you can become a member here for just $2 a month, and I'll answer all your queries, whether you have a large portfolio or any queries with respect to stock at any time of the day. I'm here to help you out. Okay, so the three stocks that I was talking about is Skillpest India, which I have bought into and currently at circuits, and people thinking as to when they can get in. And my call of 450, if should will not be coming. Many people were talking about it, so I'll analyze that again for you. Second thought is Bajaj Finance, uh, which has been a wealth destroyers for many over the last 2 months, 3 months or so. The stock has fallen from 5,000 to 2,000 levels, 2,100 levels. Whether you should buy into it or not, uh, we need to talk about that. And a third share, I'll talk about it later on as to what needs to be done. I'll pick a third share on my behalf, and I will discuss that as well. So let's talk about Kilpest first of all. And people are talking that or saying that the company is not making a lot of profits, and the numbers have not been good on a standalone basis. But if you look at the consolidated numbers of Kilpest India, it has been pretty good. So the company of 3B Black Bio has been making a lot of profits over the last 5 6 years. The profit growth has been northwards of 40 50%, and that's why I told about it and I discussed about the stock earlier, and that's why I brought that up as a multi-bagger pick. It was not because that I knew that some sort of this thing would happen and diagnostic kits would be required. It was because of their business apart from the diagnostic kits was doing 40 50% profit and 30% sales growth year on year, and the company was trading at only 8 10 times earnings, which it should not have. So my target in that earlier was around 350, 360. And with this fillip of testing kits being sold in the market and getting the approval, I'm pretty confident that the company would have an EPS of around say 14 15 rupees in FY21, and a target of 450 500 is very much achievable, because normally diagnostic companies trade at 40 to 50 times earnings. So that's about Kilpest India. The second stock that I would like to talk to you about is Bajaj Finance, and many of you are waiting to hear about what is my opinion. See, there are two sets of thoughts in here. Bajaj Finance is a very good company. That's first thing. They are the market leader in lending to, you can say, retail consumers on short loans for products like bikes, for mobile phones, and so on and so forth. So that would continue. I'm not saying that Bajaj Finance would be a very bad company to get into, or a company that you'll never buy and it will never be a multi-bagger and so on and so forth from these numbers. What I'm trying to tell you is that Bajaj Finance would suffer a lot because people's salaries are at stake. Many people earn through businesses, many people earn through self jobs, and so on and so forth. And many people do not get or will not be getting particular salaries in their accounts as you might be understanding, apart from say 20-30 crore people who are doing work, probably 20% of them will get the salary no matter if they do the job or not, but 80% others would have to either do job from work from home, may get salary cuts and so on and so forth. So there would be more people defaulting on their you can say EMIs for these their products, and so the numbers would not be that great. In fact, the numbers would be extremely bad for the next 2 quarters. I'm not even saying this quarter Q1, but Q1 and Q2. In that regard, for the time being, I said that you need to avoid Bajaj Finance at these levels. Bajaj Finance will be very interesting at 1800 or below 1800. That's my opinion. So it's very close to that. You can start buying, but have a 3 to 5 year time horizon. Do not have a time horizon of 1 year and the stock would double and this way, that way. There are many other stocks in the consumption domain, in consumer discretionary, and other sectors in mid and small cap, which can easily double from the current levels whenever the market recovers 6 months down the line or so. But in case of Bajaj Finance, we may see a bounce to 3000. So from 2000, we could go to 3000, we could come back to 2300, 2400. But we will not see the same kind of mojo as we have seen earlier. So you need to take that into consideration with Bajaj Finance. Otherwise, the company, the business, and everything is pretty good, but it will be hampered because of the current circumstances that we are in. Rather than looking into Bajaj Finance, if you have not got in there, or if you're making good profits into it, you can buy into diagnostic companies, larger diagnostic companies like Thyrocare, Dr. Lal Path Labs, or hospital companies like Apollo Hospitals, etc. Because they are going to now, and add to that, you can buy into insurance companies which are into health insurance, which are into life insurance, because people would be more worried about safety and protection of their family and themselves, because these things now they'll consider that these things may also hit them. So these are the companies to look at. uh, and other companies which are into finance, lending, etc., avoid those. We have seen what has happened with Shriram Transport Finance and such other companies which are financing into, you can have, vehicles in agriculture or in rural areas, or Jeevan, etc. They have been completely bashed up because in their cases this is extremely detrimental, and we could see massive falls in the market in those stocks even after the lockdown ends, and when the results come out, because these sectors may not recover at all, or maybe it may not recover in time as other stocks would be. So Bajaj Finance is a buy currently and on declines, but do not expect it to go to 4000, 5000 in a jiffy. So that was my opinion about Bajaj Finance. The third stock I want to look at, and I forgot as to what I said earlier, but one stock that I'm looking at very closely, and it is under my radar, is Bata. Now, in case of Bata, which has moved up today and had fallen from 17-1800 rupees, I'm pretty bullish on it, and the reason behind it is a debt-free company and something that you can look at for a longer period of time, because they are making shoes. uh, their raw material is leather, and leather, when it is produced, is using oil, and oil components are coming cheaper. That's one thing. So they'll be making more margins. Second thing is, uh, the kind of segment that they cater to will not be affected much when with respect to money or cash flow, because they are selling the shoes with you can say a price band of 200 rupees all the way to 3000, 3000 to 4000 rupees. And the people who go to offices, or students, or other people who are working in that regard, they all are they all will be using it. So whenever this lockdown ends, students would be requiring shoes, and other people would be requiring stylish shoes, etc., for office, for formal things, for schools, and so on and so forth. So the sales would continue to happen. I don't think in a very bad economy, their sales would get affected unless we go into complete recession, which I don't think we'll get into. The world could be the many of the companies may end up bankrupt. Many of the countries will have the problem of recession. India as a whole may not, and that's why that is another reason why I would like you to stay away from, say, the financials, because those companies will suffer because they work on lending. But a company like Bata is always on cash business, so this is something you can look at for a longer period of time at levels closer to 1000 and 1200. So between 1000 and 1200 would be very good levels to get into Bata. So now let's take in your questions, and thanks a lot, Prashant, for your super chat contributions. Market up by 700 points. Did not trading today. All the stocks are up. Should I wait for the stocks to fall again to 8,000 levels? Unable to get kill pest. First of all, for Kelpes, what you can do is, if it is possible, put in a buy order for tomorrow at 20% circuit. So probably put up a buy order at 119 rupees and you will get it. Uh, you put in that buy order today, if you can, from your software for tomorrow at 119 rupees, and probably you'll get it in the pre-opening today, tomorrow. Second thing is, if you want to get into Kilpest post opening, then put in the buy order and then hope for somebody to sell at those levels at 120 odd, because that would be the next circuit, and probably you'll get it. About the markets, yes, it has went up, and against my, you can say, opinion, or probably my expectation, it has gone up. I thought that 8500, 8550 would be a big resistance and the market would fall. It did not. Market maybe is factoring in that there are not much cases that are coming up, and we could see a partial, at least, upliftment of lockdown and so on and so forth. But what I am concerned about is what happens after this lockdown is lifted in many parts of India. Then, if there are issues that erupt with respect to test getting positive and so on and so forth, then there could be a lot of problems. So one has to have an understanding and need to analyze this very closely. And I do not think that the lockdown will open up so easily. There could be partial liftment of it and then a total closure later on. That is my opinion. And we could see such situation continue till June. So in my opinion, don't do anything in the market when it goes up so much. Wait for levels less than 8,000 and then get into the market. That is my opinion. Do not worry about these stocks going up. They will come down a bit and then get into it. Look at market levels and then get into the market. So around 8,100 to 8,000, put in your 10-12%, and then at 7,700 put in the next 10-12, and on every 200-300 point decline, put in your money. Even if your stock is up, put in the money when the market is down, because if your stock is up and the market is down, the stock is even more, you can say, having even more strength. So that's my opinion for that, and thanks a lot for your super chat contribution. Okay, more questions that have come up. So by Bajaj Finance call, I just made it that you can buy into it, but don't expect it to double or anything. But keep buying into it at these levels, 2100, 2200 levels. Nifty will correct from 9100. One should only buy pharmaceutical companies. It can give positive returns. Yes, Jayesh, I believe that pharma is good, but I am also seeing one more thing, and that just went out of my mind, and I want to discuss that. That on every bear market falls, whenever the market falls big time, whenever there is 20, 25, 30% capitulation in the market, in this case, we could have a 40 to 50% capitulation in the market. Whenever the rally comes up, then we see new sectors coming up. So we have already seen a pharmaceutical rally from 2011 to 2016. We have seen an infrastructure capital goods run rally with power, etc., between 2003 and 7. We have seen a rally in between 2013 to 17 in all small caps, apart from infrastructure capital goods. The small caps which are into ancillary, like auto ancillary, electricity ancillary, or infrastructure ancillary companies. So we have a V-Guard, Evels, etc. We did well. I feel that whenever the market goes up from here, we could be in a situation where we will be having stocks which are in the diagnostic domain doing well. So not pharmaceutical, but specifically diagnostics. So stocks like Thyrocare, Dr. Lal Path Labs, hospital stocks like Max, or for that matter, you had Metro Healthcare, and then there is Apollo Hospitals, Fortis, other listed companies like Kilpest, which is into diagnostics. These companies would continue to do well, and we could be at a very initial stage of a bull market in this sector. Yeah, so one needs to look at this sector very closely, and I'm not saying go ahead and buy these stocks, but look at the numbers, look at all the scenario, and then get into such stocks rather than looking at pure pharmaceuticals. Some pharmaceutical companies will continue to do well. Thanks a lot, Saurabh, for your super chat contribution. If you have any query, kindly put it through me. But thanks a lot for your contribution. So that is my opinion. Apart from this, which other sector one can look at is autos. Autos have not done well over the last 2 years, 2.5 years. Auto ancillary is a sector that one can definitely look at from a 5 to 6 year perspective. Not now, but in decent decline. So something like an Aisha Motors at 12,600. It is coming extremely cheap because the numbers are bad because of the lockdown that is taking place. So the numbers will again be good, and this is just a sell off. So if you get an opportunity at a below 12,000, closer to 10,000 level, these are very good levels to get into Aisha. Closer to 3,000 levels would be very good for something like a Maruti. Even 4,000 is good, but closer to 3,000 would be even better. So some auto stocks are pretty good, like Aisha and Maruti, or Motherson Sumi for that matter, which has been absolutely bashed and battered. So these are some of the sectors that could really do well. Okay, Saurabh. So Saurabh has asked, can you suggest for long term share name as per current situation, which share to buy? So I just said Maruti on major declines, Aisha Motors on major declines would be very good. HDFC Bank, for that matter, would be very good. SBI cards on major declines. You can look at a Bata. I have discussed about it. And if you really want to get into small caps, then again Bata is a small cap at around 10,000 crore or less than that. You can look at that. Look at a Blue Star, a good company, Voltas. There are many that are around, but buy in tranches and buy on declines. That is my suggestion. Okay, Hitesh. Motherson is likely to go bankrupt, okay, due to inorganic growth. Well, anything can happen in the market, and I feel it will not. I think it is a huge brand, and the only problem Motherson is having is the problems that are happening in Europe, and their major business comes from Europe. Things will get better over the next 6 months. I feel it is at a very discounted levels at around 50 to 60 rupees. If you get it closer to 50 and then below it, keep on adding. And over the next 5 6 years, it would easily give you 3 to 4x return if you have an average price of 50 55. That is my suggestion. And once Europe recovers, these stocks like Motherson and FL will recover pretty quickly. Absolutely not. Bharat Forge is not a buy BTC. I think in auto ancillary, I only like only two or three companies. One is Motherson Sumi, the other one is Bosch to an extent, and one is Automotive Excel. But my best pick here would be something like a Motherson Sumi, which FMCG can still be bought after days rally as HUL, Nestle, Britannia all have gone up sharply. Nestle, Britannia, both are a buy on declines. So again, it has gone up sharply, but it did fell in between over the last 1 month. It has means both these stocks have gone up and gone down and so on and so forth. Whenever these stocks fall 4 5% and from these levels, mark down these levels that are coming in the markets and these stocks, and whenever they are down 5 6% from these levels, get into these stocks. So do not worry that these stocks are going out of hand for you. The companies, these stocks, everything, the market would come down from 8800, 8900 levels, and then you will have opportunity to get into the stocks. Should we invest in Sharda Cropchem? Rather than Sharda Cropchem, you can look at Bear Crop Sciences. It is a similar business altogether, but a better stock. And remember that get into only top-notch stocks. Don't get into stocks which are where you can say second rung or third rung. In every industry, there's a top company. For example, in electronic manufacturing, there's Dixon. In you can say diagnostics, there's Dr. Lal. Then there is in auto ancillary, as I said, Motherson Sumi. So in chemicals or agrochemicals, pure agrochemicals for crop protection, you have Bayer Crop Sciences. So get in there. If you go further into it with a larger portfolio, then you can look at UPL, which has a more larger portfolio and cater to the global audience, whereas Bayer Crop Science is more or less based in India, although it also sells abroad. And they are into agrochemicals rather than being in different types of chemicals. So this is my opinion. What is the target of Kilpest if I buy at 119 tomorrow? I think Kilpest can easily go to 140, 145 on circuits, but really I cannot consider in the short term targets. But I have a feeling that the stock can, over the next 1 year, easily reach 450, 500 easily. I do not see any problem because of the kind of market cap that the company possesses and the kind of sales that would come in for this quarter. The stock can easily go to 400, 450 levels. Okay, Rajesh, Minda Industries for long term. Avoid Minda Industries. Better to get into the auto ancillary stocks that I have just mentioned rather than getting into other auto ancillary stocks. I'm not saying these are bad companies, but this problem of lockdown and this problem that has taken a toll on these ancillary companies because already the growth was low, already exports were low. Now the problem with China had happened a big time, and that has hurt the auto industry. And now you see the same problem happening in India. So things are very precariously poised, and that's why I'm saying that yes, definitely you buy, but don't buy into non-leaders. Buy into leading companies in all sectors. So if you look at pharmaceutical, buy into a Divi's Lab, a Dr. Reddy's, a Lupin, rather than buying into any second or third rung pharma. Buy into an Infosys and TCS rather than looking at mid-cap ITs, and so on and so forth. My opinion about Avanti feeds is simple, and I did give that earlier also that yes, you can buy into it, but again, be very cautious. Rather than looking at that sector, look at a sector which is into pure consumption. Even if the stocks are expensive on any declines, you get into it. Dixon is a very good share to get into. You can get into the stock at around 3,000, 3,500 between those levels. It has run up today, I know, but avoid buying on run ups, buy on decline. So it was down, say, on Friday. So you could have got in on Friday. As per Warren Buffett indicator, low is already done in Nifty. Your view. I don't know about that. I don't know detail. I'm just telling you about the current situation. See, मेरा ओपिनियन ये है, अगर मैं क्लियरली अभी हिंदी में बताऊं, कि मार्केट्स ने अभी तक गेज नहीं करा है कि ये कहाँ तक नीचे जाएगा. मार्केट्स हैव नॉट गेज्ड एज टू हाउ बैड द सिचुएशन कुड बी, because the testing has not been done that much, and so this is going to affect the economy badly. So there will always be bad news around, And the way the market has gone up, it is giving more fillip or more fuel to bears to short the market. And this is not helping people who are more optimistic about the market. And I have no doubt that the market is going to fall at least 20% from these levels, which is around 1700 points. So they will go to 7100 probably in the next 2 months or so. Thanks a lot, Prashant, for your super chat contribution. I don't did not understand what you meant by circuits for Kilpest. Kindly explain again, please. What are your targets for Kilpest after 4 to 5 years? I have not thought that what will be the targets in 4 to 5 years. Thanks a lot for the contribution, Rohit, as well. And if you have any queries, kindly put it through. And now, to answer your query, I have not thought about 5 years, but before this testing kits approval came in, I had an opinion that Kilpes would come out with an EPS of around 10 rupees this year, which is FY20, 13 rupees, probably 13, 14 rupees in FY21, and around 20 rupees in 22. So by mid 2022 to 2022 December, the stock could trade at 500 rupees. So my all-time target, that's why was 3 4 years down the line, was 500 rupees. Now with this approval, I believe that 20 rupees EPS is easily achievable by FY22, easily. I mean, it could go even beyond that. And the company would be now taken as a, you can say, the company would be regarded as a diagnostic company and not an agrochemical company, because 3B Black Bio is its main business consolidatedly. So, in that regard, I feel that the stock could be trading at anywhere close to 800 rupees to 1000 rupees over the next 3 to 4 years. That is my opinion, and people would be making fun as to how can he say like that. Yes, I am holding the stock and all, and I may sell it very early. I may sell it at 400, 500 rupees. I'll let you know when I sell it. But overall, if the company produces 20 rupees EPS in the next 2 to 3 years, the stock should trade at 40 times, which is 800 rupees. But again, do your own analysis and you'll come to know about it. About circuits, as I explained, that the company, that the stock is on circuits, there is a high demand about for the stock. So what happens is the stock opens directly on a 20% circuit. So 100 rupees will directly become 120, rupees tomorrow. uh, in the pre-opening there could be some buying, and there could be a chance that if you put in an order at around 19 rupees or 19% higher, don't put it on a 20%, because then you'll be stuck on that circuit and you might not get the share. So if you put the order at 119 rupees, you might be just be able to get the stock. That was my thought. Thanks a lot for your contribution also, and kindly visit the Patreon website of mine, and you'll be able to look at many articles there as well. More questions that are coming in. Please talk about Vedanta. Okay, so let's talk about the you can say the metal industry. So the biggest producers of metals are, and also the use of metals is being done in China because of the infrastructure boom there. Second biggest is in US, where the infrastructure boom was big and there was a lot of development taking place. China has suffered over the last 2 3 months, as has America, which is suffering at the moment. So I think metals is going to struggle over the course of the next 1 1.5 years. Yes, the metal sector might have bottomed out during this period, but it is a very risky trade to make because you don't know when it would reverse. So the bottoming out process may be completed, but whether you're going to make a lot of money in metals or not, nobody knows. So I stay away from commodity stocks. So I stay away from metals or gold stocks or gold loan stocks, tire stocks, even rubber, so on and so forth. So, in my opinion, completely avoid the metal sector. That is my opinion. And yes, we could see bounce, we could see trading bounce in it, but it's very difficult to trade. At what price to exit IndusInd Bank? What is your buy price, Shibi, if I may know? And only then I can tell you. SBI cards is now 580 pricing. The stock is better than IRCTC. I think yes. I think SBI cards at around 550 to 500 levels would be very good levels to get into on these kind of declines. I think IRCTC is expensive. I had got in about 10 stocks of IRCTC and I sold them today on circuits. And I would like to buy more of, you can say, Tanla solutions that I was talking about. So, in that regard, yes, IRCTC is comparatively expensive than SBI cards. I think IndusInd Bank, the question asked about IndusInd Bank, I would say if you have bought it at lower levels and you are in profit, you're lucky, just get out of it. Even if you are at minimal loss or not much loss, then also get on out of it. I'm very negative on all financials, slightly positive on HDFC Bank and Bajaj Finance, but that's just about it. On complete financials, I'm totally negative and I can see more downside in the whole financial sector altogether. Avoid Canfin Homes, that's my opinion. Okay. I have discussed Bajaj Finance, Saurabh. So I have discussed Bajaj Finance in detail. You can look at the full stream later on when I upload it. And my opinion is it's a buy at 2100, but do not expect Bajaj Finance to hit 5000, 6000 very quickly. It might just be in a range and it might not do that well. And I have discussed about all the points of Bajaj Finance early on. So just go through that. Avoid Mannapuram. Atal Limited is a very good stock, Atul. So, Sujoy, yes, you can get into it, but again, get into on major declines, and hopefully, you'll have a nice buy price and you'll be in profits. Please try to make a list of good buys along with the buying ranges, holding period, etc. So, Rohit, yes, I will do that, and hopefully, this weekend or next weekend, I'm going to come up with a video as to which are the stocks you should be looking at in this turmoil for a 5 year time frame, and what are my targets in those stocks and why I'm saying that. So I'll bring that to you very soon. Yes. Sterlite Technologies is an avoid. I have given full reason in I made a few videos on Sterlite Technology, Karthik, so you can go ahead and watch that. I believe that it is a complete avoid because of what has Geo has done, and Geo has their own infrastructure. So in Sterlite lose out because of that, and of course they have a global presence, so they'd suffer because globally also markets are completely down. There's no activity with respect to the business that they are into, so it is an avoid. Okay. Zydus, Ipca, or Aarti in drugs. I think avoid Aarti industry is good. And to an extent, if you would like to get into something like chemical sector, then Aarti industries and I would say Vinati Organics are good to buy on declines. Okay. Axis Bank, good share, good share. You can get into it on declines. But again, I would say avoid banking sector altogether. Although Axis has not come out with any wrongdoings or anything with respect to NPAs, etc. But you never know. I would completely avoid the financial sector. I'm sorry. I would completely avoid the financial sector. Yes, escorts is a good buy. On major declines, get into escorts over the next 3 4 years. You can easily double or more than that over the next 3 years or so. GSK Consumer Healthcare. You do Horlicks deal, but I want to know others OTC product of GSK Consumer. So what I'll do, Sujay, is I'll make a video on GSK Consumer because I need to know the details as well, and only then I can explain to you. Make a video on GSK Consumer. Kindly put this in the comment box as well that I make a video on GSK Consumer. Would do that in the next 3 4 weeks for sure. Uh, okay, Sun TV is a complete avoid. Do not get into Sun TV. Okay, PVR. So I've explained about PVR in my QA session as well. I think in a couple of question answer session I have done that. PVR is a good share to buy if you have a 4 5 year view. That's first thing. And second thing is if you are ready to take in a 30, 40, 50% pain on your buy price, even if you buy at 800, 900 or whichever level. We don't know how long it will take for the people to come back into the theater and you can say recreation business. And that is why I believe that anybody who buys into PVR at any levels, be it 800, 900, 700, 750, may end up suffering for at least 6 months to a year. So if you are ready to do that, go ahead and buy in declines, buy on any 5 7% declines and sit on it for the next 4 5 years. Yes, you'll be able to make at least 3 4x money out of PVR. But then you have to be very patient with the stock. Very good stock, Joydeep. Frontier Springs in that auto ancillary space. So yes, you can get into it on major declines. I like the company, but again, the point remains that it is not a leader. So kindly get into leading companies in the sector rather than getting into a very small cap because it is extremely risky with the kind of business environment we are in. Has FL bottomed out? I don't think FL has bottomed out. So FL India, I'm holding, and I bought more into FL earlier last week. I would buy more of it, but I'll buy it at around 900 to 800 levels and closer to 700 levels. I don't think it has bottomed out. It is just a rally in that, but these are very good levels to get into FL. I think the problems in Europe is going to hurt the company over the next 3 months, and we'll see levels of closer to 900 or even closer to 800 in the coming weeks. Good share SRF, get into SRF. I made video on it and probably I have uploaded already on SRF or will do in the next few weeks. Very good share to get in declines. HUL has become expensive at the moment and I feel that on any major 5 7% declines from these levels, get into HUL for a 4 year, 5 year time frame. JB Chemicals. Avoid JB Chemicals and the chemical companies that I have discussed. Kindly get into it. Tata Chemical is good. Amara Raja avoid. Tata Chemical is good on declines. You can get into it. So you bought into Tanla. Good that you have bought into Tanla, Vicky. And I think on declines, if it comes to 48, 46, buy more of it. I'm very bullish on Tanla and I'm holding Tanla Solutions. Please advise avoid Sun TV. Why I'm saying avoid Sun TV is because the Reliance have come up with their Wi-Fi connection, and along with that Wi-Fi connection, they are giving you free internet, and through internet they have the Reliance Geo TV. They are providing Geo TV on television, on smart television with a device. People are looking forward to that rather than looking at Sun TV and the products of Sun TV, like producing Sun TV also generates revenues from cable television and so on and so forth. So these things would go out of fashion in my regard, and Reliance Industries would may come out trump in this cable television and online space. So but kindly avoid that. Avoid Century Plyboard. That's my opinion. Supply is a buy on declines. I think it has fallen so much over the last 4 5 years, at least the last 5 years, that now it is time to buy into it. But on major declines to 420, 430, 400 levels would be very good levels to get into Cipla. Buying levels for InfoEdge, any level below 2000 rupees would be very good levels to get into InfoEdge. Anywhere close to 2000, 2100. If it is trading right now, you can get into it, and on any 10% decline, get into it. Thanks a lot for Dr. Jogi for your super chat contribution. Okay, Petronet LNG, Concor BEL PFC for longer term. Concor is good. Avoid others, and if you have it, shift to the consumer companies. The reason is BEL will not get a lot of orders. and it is struggling at the moment, yes, you'll get very good dividend yield. But if you're talking about dividend yield, these all stocks are good. But you're talking about growth, then get into growth companies like FL, like Tanla Solutions, or in the large caps or larger mid caps like Bata, Asian Paints, or for that matter, the stock that we are talking about, FL India, and so on and so forth. All right. You're welcome, Chitresh, and kindly subscribe to me on the Patreon channel as well. Okay, guys, so this was my live chat and interaction with you. I tried to answer all your queries that have come in. Kindly put in more queries in the comment box, and I'll definitely try to answer this weekend. Also, I'll be online. I'll try to be online this weekend on Saturday, so we'll answer all your queries at that point of time. Be safe, be at your home, and be safe, and help India fight this thing together. Thank you.